Hello and welcome to the How to Trade Like a Pro podcast. I'm Wieland Arlt, and in this episode I get interviewed by Theodorou, and we're talking about, of course, trading. Before we start, please take a closer look to the risk disclaimer in the show notes, and now enjoy the interview.
Hello, everyone, and welcome to another Market Talk series. Today, we have the privilege and honor to have Mr. Arlt with us, Wieland Arlt. And it's a really exciting, I can say, and a bit more special, this Market Talk event, as Wieland hosts an event and that I was a guest few months ago, and today I have the privilege and honor to host this Market Talks with William. William is the president of the International Federation of Technical Analysis. He's an exceptional trader and investor. He teaches more than 20,000 students so far, and it will be an exciting conversation or discussion today, if you prefer. And I'm sure we're going to learn a lot from this gentleman. And yeah, William, very welcome to our Market Talk event here at Admirals. How are you doing?
Theo, thank you so much. I'm great because, it's always a pleasure meeting you, talking with you. That's like it is, as befriended colleagues, it's always a pleasure. So I'm really looking forward to our talk, our discussion. And of course, I'm happy to share some experiences, ideas, and knowledge, and maybe some wisdom as well. Let's see.
Absolutely. So I would like to start first by asking you, what did make you to get into the trading world?
Oh my! Well, what can I say? The people usually try to tell really smart stories about this. For me, it's just like, I was so freaking bored back then.
Okay.
So I was just browsing the web. Well, actually, back then I was a sales manager at a big clothing brand, like real designer brand.
Yep.
And I was stuck in my showroom waiting for clients, browsing the web. And guess what? I just came across a financial website, and this website listed the winners and losers of the day. And these were not just winners and losers, these were winners of, like, let's say 300% a day, winners. And you can imagine, as a sales guy, I felt like, what is this? Why am I sitting here and not doing this? What I didn't know back then was it was high leverage products.
Okay, yep.
For that reason, they were so high up. And of course, when I started then trying to trade like this, oh my God, I lost so much money.
Okay.
Because of that.
Yeah. Makes sense. And you went a bit aggressive, I assume, from the description. You went a bit aggressive to go all in and try to buy that house or that car.
Not really that way. It's in terms of, like nowadays, everybody wants to go for the Lambo. No, just kidding. But, it's like, get rich quick. But that wasn't the idea. And still, it's not the idea I focus on when it comes to trading. From my terms, my point of view, trading is not about, I have to get rich right now.
Yeah.
This can happen, obviously, and of course, and it's also very welcome, but it's more about having the means and the possibilities really to live your own lives on your own terms, whatever you feel like the right life is for you.
Yeah.
And trading gives you the support to do so. And the moment you are able to, to generate money on a daily, weekly, monthly basis, whatever, just by sitting on your computer on the screen by trading, this is the moment where you're completely free. right?
Yes.
So then you're already rich because you can make money whenever you want. That's the idea I have with trading.
Yeah, also. And what kind of trader you are? Are you an intraday, are a scalper, or you do swing trading? Can you please explain us a little bit what sort of trading style?
Oh yeah, I mean, basically, I would so much like to say that I'm a swing trader. Turns out I'm a scalper.
Okay.
So I'm trading intraday, and of course my trades are designed to be swing trades. But then you'd say, okay, maybe I want to exit the position right now and just secure my profits.
Yeah.
And there's nothing wrong with that. But whenever you say, okay, I want to have the big swings, you end up pretty often just not exactly having them, but going up break even or coming back to the point where you could have exited before with with a targeted profit as a scalper. So I would say I'm a swing scalper.
Okay. Yeah. Totally understand. And so do you mainly trade currencies or stocks, indices, commodities? Can you please walk us through a little bit so people may know what stuff?
Yeah. Also here, I would love to say I'm so much doing all the screening on stocks and trying to figure out what is the best and the right one. But then, well, I'm an intraday trader. I'm trading just I try to catch the move and get the points, and therefore I'm trading futures and CFDs. So I'm more into indices because these guys are always moving.
Yeah.
And if you sit in front of, let's say, one or two markets, then it's already enough. And the question always is, if I can go deeper a bit here.
Sure.
Why an index? So, basically, first of all, a lot of people they have too many charts on the screen. Second, they focus, they screen, and they try to find the best trade. But what they always forget is that the moment you sit in front of your chart, of your market, this market moves. And it moves slowly, then it moves faster, it moves up, it moves down, it moves sideways. So no matter what kind of strategy you're trading, you will have your setup at least once a day. If not, you have the wrong setup, of course. Because as the markets move, usually, in general, you can expect every setup at least once a day. My trading strategy is designed to appear, let's say, at least 4 times a day.
Awesome.
Maybe.
So do you look any like euro US dollar pair or pound US dollar, or do you prefer to just focus on the indices, let's say on the FTSE 100 and the DAX?
No, I just focus on, my thoughts were those. I was thinking about, first of all, okay, I want to make money and I want to live from trading. So how much money do I need at all, right? So then if, okay, I need $10,000. So you can add zeros or, But let's say I need $10,000. So when I'm a day trader and I trade like 4 weeks a month, this is $2,500 a month before tax also. So we're not talking tax. So, and if I have $2,500 a week, this equals $500 profit a day. I mean, this is a simple, basic calculation. And then the question is, okay, what can I trade? What can I look for when I want to have $500 a day? I need a volatile market, right? So, and what kind of market will give this to me? And what I felt like, this is the most volatile market which is out there when it comes to, the basic or classic ones. And that's, for me, is the NASDAQ 100. Because
wow, I love the way you start the conversation, and maybe the people, they were thinking, he's gonna say something, but that's so amazing, honestly.
Because, you can easily get 10, 20 points in one move with a Nasdaq. But you have to apply your risk management as well. But
Yes.
if the Nasdaq runs, it runs. You have the move, and then, it exhausts and then comes back. So you want to get out. So as I'm a swing scalper, something like that,
Yes.
I can get the 10, 20 points. And now let's say if you go with the futures, $20 a point, I need exactly 25 points, period. So when things are good, I'm done with one trade. If things are bad, like first one is a loser, okay, we have to talk. And then I have to wait for the next situation. But as it is so volatile, going up, going down, I have some kind of opportunities to find my trades and therefore make my money.
Perfect. Fantastic.
So that's why no currency pairs and no other markets, just that one. And I'm just wait and sit there and wait.
Okay. So the other question now, do you have any specific time frame you enter the market?
Sure. Yeah, sure. I have, usually I trade a 5 minutes chart because this offers not too many opportunities, which is very important because if you go 1 minute, you have so many signals and lots of them, they are false ones. So you make too many trades and it's quite stressy. So I prefer sitting on a 5 minute chart. This means I can look also at another window and doing something else like writing mails or something like that without losing sight on the markets and missing some signals. So that's basically the idea. Of course, it's very important to do, like the triple screen. You go from daily to hourly and then see where are we going with 5 minutes. And then it's also important to see what kind of trend are we talking about, on the higher time frame, the lower time frame, where resistance is, where support zones. And once I know that, it's pretty easy to know where I have to exit the trade, even though my strategy would suggest something else. But if I'm coming with my trade to a support zone, when I go short, to a resistance zone when I go long, it's better to exit. So therefore, 5 minutes for me is perfect.
Okay. I would like to go deeper into your strategy and to analyze a little bit when you said from daily to hourly to 5 minutes support, resistance, and so on.
Uh-huh.
And can I ask you something? Are there, before we go to more details, do you look to trade NASDAQ at a certain time of a day? Did you find any type of correlation with volatility, like during this period of time, there is more solid moves, regardless if the move is going to end up a sideways move, up or down? We are not talking about when do you find the winners? No, because we know that doesn't exist. But do you find times that NASDAQ moves on a better at certain times?
Well, there are two answers to one question. So actually, I have two hearts beating in my chest right now. So if you go to, let's say, to the European session, NASDAQ is quite easy to handle. The volatility isn't that high, and quite often it just goes up and down, moving sideways in nice swings, providing a couple of points here, providing a couple of points there, which is perfect because without this crazy and mad volatility when market opens, where everything can happen, and everything is possible, you cannot find any situations to trade there if you're not totally out of your mind. So the pre-markets, like the European session, are very calm and quiet and very easy and good to handle. But they don't offer that much volatility that you have 10, 15, 20 points. It's just, going up and down sideways. The best time maybe is around open, let's say 9:30 Eastern time. So it's nothing wrong going 9:30 and seeing all the, all the volatility coming in. You see big, huge candles green, the next one, big, huge candle red, and so on. But when market finds direction, there are very good opportunities that my strategy can be applied. So this is something around 9:30 and 2 hours later, something, let's say, around 11. So let's say 90 to 120 minutes after market open. These are my times. And basically, this should be efficient and enough.
Yeah. Wow. Awesome. I'm sure that people will appreciate a lot that I see some very interesting questions on the chat, but we're going to leave some time towards the end. And so can you walk us through a little bit more on your strategy? Like, right. First thing you do when you decided, okay, today I'm going to open the computer, my platform, I'm going to look for opportunities. So what do you actually do, if that's okay to share it with us today?
Yes, of course. I'm not shy in sharing my strategies. Actually, on my website, you can find them also for free just to see their videos. You just can click and watch without anything giving, no information, no data, nada. It's just, my main strategy is called the expander strategy. And this one is basically built from Bollinger Bands and candlestick signals. So the idea is to catch the volatility and see where volatility comes to an end. That's why I expand it, because if you overstretch it, if you just open one hand, it just snaps, something like that. And that's the idea, to find the reversal. And with the candlesticks, I see that the reversal is already happening. The market participants they just go that way and they turn things over and just go the opposite direction. So this is something where I say, okay, I'm going with a swing. And then it's just a matter of the volatility as well. It's because where do I put my profit target? And this is always connected with the Bollinger Bands. And sometimes it's the middle of the Bollinger Bands, the simple moving average 20. And sometimes it's the other side, which is then the perfect swing. And then very often you see that the price then reverses again. And this is the swing I try to catch. And if I'm not so keen on waiting, I just exit everything on the middle of the Bollinger Bands.
Okay.
So that's my basic. And from that going on, then to more strategies just by following the market's move.
Awesome. What about when you said you are looking on the daily chart?
Yeah.
For example, daily chart, it's in a smooth uptrend.
Mm-hmm.
And I see also many traders, they get a little bit misunderstanding with how to read the market. So they see in one time frame an uptrend, they see another time frame a downtrend, and they are thinking, okay, should I buy? Should I sell? Should I look for bullish or bearish opportunities now? Can you explain us a little bit what sort of ideal picture you want to see on the higher time frame, and then going to the 1 hour chart, as you said, and then the 5-minute chart for execution?
Sure, I'm happy to do so. So first of all, if you look at the daily chart, most important, first of all, to see is where are the important resistance and support zones.
Mm-hmm.
Because you can be pretty sure that everybody in the market is looking at those. So if you find in your 5-minute chart, if you find an entry which is very close to the next resistance, for example, and you want to buy it, you can be pretty sure that your trade will not go that far.
Yeah.
On a normal basis. Of course, there are exemptions, but on a normally it's just a loser, because you're just buying into resistance. But if you see something like, with my expander strategy, and you see the reversal sign, and you want to go long, and you see this reversal sign on support on a daily time frame, you can be assured that everybody's looking at this, and that you have a good chance to, just to follow through, and that not just you are looking at this, but a lot of other market participants as well following that move. So what we are looking for is follow through. right, in the moves, and the market just, goes up and up and up. And this is most likely to happen if you have this on the right spot. So therefore, daily chart is very important. So second one, if you go with the trend of the daily chart and you see support and resistance over there, and let's say you have an uptrend and price drops to a very important support zone, then you can go in the direction of the uptrend, and also you have all the chances on your side as well. So this is the next one. And now let's say you have an uptrend in a daily chart, and you have in the hourly chart, you have a downtrend, and a 5-minute chart, you have an uptrend again. So what does this mean? So what we are talking about right now are fractures of the market. So this means you have the overall trend, the general trend, the long-term trend, which is daily, and also the weekly chart. These are the impulse moves of the trend. And as we have impulse moves, we also have correctional moves, which are going to the opposite direction, of course. It's a correction. And it's very easy to see and to understand that if you are going into a correction in the daily chart, you're very likely to see this in the hourly chart as well. That's number one. And then if you go deeper in your time frame, and go from hourly to 5 minutes, you might have the correction of the downtrend happening in the 5 minutes chart. And this is, if you put everything together, this is what you can see then in the charts as this higher high and higher low thing, or vice versa, because you have impulse correction. And this is what gets clustered in the different time frames.
Awesome. And then you mentioned you're using Bollinger bands and candlesticks to, I assume, to execute your trades, right?
Right. Yeah.
So ideally, what information you want to extract from the Bollinger bands and the candle lines?
Oh, the idea is pretty interesting, and for me, it's very convincing. So the point is, if you look at Bollinger bands and you know where they're coming from, because from the bell curve and from some kind of distribution, it's just about the probability of simple results of random results, and the probability of having random results in the majority is somewhere between 90% of the standard deviation, -2 and +2. And this is what John Bollinger also figured out when he developed his Bollinger bands. And the idea here is to see that most of the prices in a market are within the bands, which means 90% of the prices are within the bands. And what I'm looking for is prices outside of the bands, like upper or lower bands. And I like to see that market participants try to bring those prices back into the bands. Let's say they make the reversal. And if we look at, the probabilities over there, and let's say you have 90% of all prices within the bands, this means you have just 10% maximum outside of the bands. And this is the moment where you see the prices are overstretched already, the moves are overstretched, and the probability for a reversal is very high already in these zones. And if you look at Bollinger bands and see the prices, every time prices go outside, they tend to return. But the question is, when? When is this happening? And if you look at the candlesticks, you see this is already happening right now.
Yeah.
So I want to see a hammer, I want to see a shooting star, something like that. And then I know that what I was waiting for is about to happen, and it's going on right now, which can give me an excellent risk-reward ratio, because if from the definition of the candlesticks, what you can do, you just place your stop loss above the high of the shooting star or beyond the low of the hammer, and then you have the whole stretch to go for the reversal. And that's the idea I'm following.
Wow. So you gave to the audience two very important, actually everything is very important, but two very, very important things about your strategy is like you want to see the price move outside of the bands.
Yeah.
Higher chances is that price it's going to retrace back to the mean, let's say, or within the bands.
Mm-hmm.
And you want to find that reversal candle line, price action, or the pattern that it's going to indicate that this move is going to happen from moment to moment. That's wow, amazing. I'm sure from tomorrow's and on Monday on the live trading webinar, people, they will ask me, okay, let's try Wieland strategy. Let's do it.
Let's find it. Yeah.
For sure, we're going to do it. Why not? Absolutely. And thanks so much for generously sharing this with us here at Admirals.
Yes, I'm happy to do so.
I also, let's just go to a little bit subject now. I also find out, not only from our discussion, but from your website and from your videos and on YouTube, you are a pretty famous personality in the industry of trading. I find out then very interesting that you talk a lot about trading psychology.
Right. It's so, oh my. Because you know why? Because if you there will be a moment where you feel very comfortable with all the technical analysis and everything. I know. And of course, you never need to stop learning when it comes to what technical analysis, but there will be a time you feel very comfortable. But from my experience, the main thing I am working on still until tomorrow and the day after and today is my own trading psychology. Because guess what? We are humans. We're emotional beings. So we have to work on this on a daily basis because market is challenging us day by day.
Awesome. And when I believe a big part of trading psychology comes also with the risk management. Because traders who have the tendency, let's say, to not pay attention to risk management, and let's face it, when you are in front of the screen and you become so intense to enter, to trade, sometimes you just forget the big picture. You just see only the candle lines, but you forget that we are trading a retracement back to the mean. We are trading a correction here, or we are within the trend of a lower time frame, not a higher time frame. And people, they just get frustrated, and then they get into that mode. Okay, should I close the trade? Should I stay on this trade? And that starts creating those emotions that we really don't want to have them while we're trading. Correct.
Exactly.
Can you walk us through a little bit of that trader's behavior and maybe a few tips from your experience and from what you teach and coach to traders?
Yeah, it's a pleasure. Well, when it comes to risk management, so the question always is, what is risk management about anyway? So a lot of people, they mistaken it. They feel like, okay, it's money management, but it's not true. Risk management is risk management. And money management is money management. And these are two different things, two sides of one coin. Maybe this means your account. So when it comes to be a trader, or when it comes to, to plan your trade, first of all, you have to feel about and think about, what am I willing to risk? What am I willing to lose? What am I willing to set on fire? And this is a question that usually people really, no problem, $100, no problem, €100, yeah, no problem for me, But when I'm when I'm speaking at an expo or a fair, some or conference, I always ask the audience, okay, guys, who can afford losing $100? And guess what? Everybody's like, yeah, me, no problem, it's no problem for me. And then I ask them, okay, who want to give me $100? And you can imagine, I never went out of the room with a $100 bill. Nobody wanted to give this to me. Not because of me, because it's more that when the market asks you to give $100, you're not so comfortable about anymore.
Yes.
Right? Mm-hmm. So that's something, a lot of people, they don't get it. And this is why if your risk is too high, you literally freak out when you get challenged to lose this. So first of all, you have to be very comfortable with the money you set on fire. That's number one. And number two is, a lot of people mistake this as well, is how much do I get for this money in terms of position size? And position size is that one that kills you. If you go too high, if you have a lot of, a huge position because you're greedy, well, guess what happens? This one goes against you and you lose a lot of money and do this one time, and then you're completely out of your mind, because this is like a huge slap from the market. And as we are human beings and we are emotional, we tend to look for revenge. And this one means like, okay, now I'm going in even deeper, which kills your account immediately on a regular basis. So this is why people have to be aware of, what am I willing to lose and how much do I really want to buy or sell in terms of position size? And everything else comes after that. Like, when do I take my profit? Because if you look at the chart, prices go up, everybody's happy as a buyer, and then the prices reverse and all your profits are gone and you're challenged to be break even. Do you really want to sit through to your stop loss? Of course not, right? So we need a profit target as well, or some kind of rule where to exit the market when we're in a profit. And a lot of people don't have this either. So that's what we definitely need in order to behave professional whenever we are trading. And this one is, from my point of view and also from my personal experience, it's the hardest thing to learn.
Wow.
Professional behavior, right?
Yeah, because many traders, they get a bit confused. I'm a professional trader. They think it's a trader who sits in front of the screen 25 hours a day.
Yeah.
But as you very well stated, is professional trader is the trader who has the discipline to understand the game and play with the rules of the game.
Exactly.
And not the other way around.
Yeah, exactly.
Can you please, I see a lot of questions coming out with question marks. Can you explain a little bit what's the difference between what you just said, how much money you are willing to lose, and just give one example, for example, to make it clear for everyone?
In terms of risk and money management? Or,
yes. Yeah.
Okay. So risk management, so it's what I already stated, is that you really have to be aware how much money do you want to really put into fire, like what am I willing to risk. When it comes to money management, and I wrote a whole book about this, by the way. So for that reason, because it's really, people need to see this and they need to understand this. So when you're talking about risk management, you want to protect your account and you want to protect every single trade, that you don't risk too much. When it comes to money management, you want to do the best with your account, and also you want to be better as a trader. So I introduced in my book let's say a graphic. I call this money management metrics, and this is about the risk you take over. This is about the risk reward ratio. It's about your hit rate and your trade frequency. And if you take a closer look to these 4 elements of this matrix, you will see that, for example, if you aim for a very high risk-reward ratio, you will experience that you have a very low hit rate by definition, right?
Yes.
And vice versa. So if you say, I like to have a high hit rate, you have to be aware that you will have, like, let's say, a risk-reward ratio of 1, 0.8, 1.3, something like this.
Yep.
But you will never go with a high hit rate to 3.0. This will not happen, right? Yep. So this is something you have to keep in mind. And also, if you work on, so I have very high risk, and you have a high trading frequency, you're about to go broke. And
yes.
For that reason.
Unavailable.
Yeah, right. And if you look at high risk-reward ratio and let's say a low trading frequency, you know that you are very picky in the choice of your trades. Or if you look at a high trading frequency, you also can be aware that that your hit rate will not be the best. It cannot be, by definition. That's impossible. So this means, looking at these 4 terms, what you can do is you can figure out, where am I good at? Where do I have my weaknesses, and where do I have my strengths? And then you can work on it as your own coach. And by doing this, you can also start planning your income as a trader, because the thoughts I presented, why do I trade the Nasdaq, coming from 10,000 over the week, 2,500, 500 a day, is exactly this. So if you put over the money management metrics, and then you feel like, okay, I have 1% risk, for example, and I want to have like 500 a day, and I can afford, let's say, 1%. I have, let's say, $50,000 account. This is $500, as a risk. Maybe it's a little bit high, but anyway, so it's $500 risk. So I need 1 winner a day, at least if it's the first one. Otherwise it starts. So you can start to calculate and say, okay, if I do like 5 trades, I have 50% hit rate. I have a risk-reward ratio of, let's say, 2 or 1.5. When I risk this 1%, then you feel like, okay, so now I can start to manage my money by doing so.
Wow, that's very crystal clear process, the way you explain it, and I hope that people, they're going to apply it, because it's not just to hear and learn something, it's also to put it into application.
Right.
And how do you deal with, let's say, if you get 2, 3, 4, 5, 6 losses in a row, if that happen with your strategy? Mm-hmm. Because what happens with my strategy, because I have on the swing trading, I have 3-to-1 minimum necessary reward to risk, then I can afford to get 7, 8, 9 losses in a row and just still be in the game and keep on going. That's because I'm trading bigs for years and years, and I just need 30 to 33 winners out of 100, and I'm fine with that. But with your trading system, how does it work, and how do you deal with the situations?
Yeah. So first of all, this situation is the worst situation a trader can be in, because having a losing streak is really challenging for your mind and also for your account. So you see money just going down, 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 and then you still have to be able to open the next trade. So this is very, very challenging, no doubt about it. So using my strategy, the expander, and by the definition of where can I apply this, because, when prices, let's say, I'm waiting for a long reversal. So the requirement here is that the prices go down. First of all, we have a down move, and the prices drop outside of the Bollinger bands. And the moment I see a reversal, which is really valid, I open this trade. But when I get stopped out, and the price drops even further, and I see the next one, the next reversal, I have to open a trade. But if you look at the chart, even though, let's say you have a weekly chart Corona crash, like back in 2020, where prices, this was a crash, so 3 weeks down. And then you see, if you look at it in every market, by the way, but let's talk about the DAX. So what you see there is a huge hammer showing that's it. See? Outside of the Bollinger Bands, by the way. And if you miss that one, the next week you have a huge green candle, both candles together forming a bullish engulfing. Okay, this one has a 1,000 point stop loss. Yeah. I mean, we're talking about weekly chart and we're talking about high volatility. But anyway, so this means that every crash or every rally has a natural end. And if I have one loser, okay. If I have two losers, okay. If I have three losers, okay. But what I know is that this reversal will happen. All I need to make sure is that I'm still there when this happens, that I'm still able to open the trade. And this is where risk management comes into place again.
Awesome. And does your strategy, that's another question, by the way, because we changed subjects and I read the questions coming. I try to ask some of the questions as well along the way. Yeah. And does your strategy has more than 50% winning ratio?
Yeah.
Okay. Awesome.
By definition, let's see. So if you go back to the theory of Bollinger Bands, 10%, it's somewhere in between. If you go really with the definition of the bell curve, it's like 95.6% are between 0 to -2 and +2 of the standard deviation. If you ask John Bollinger, it's like 88, 90, 89%, like 90% are inside and 10% outside. So you have something of all prices between 5 and maximum 10% outside of the Bollinger Bands. So this is one statistic over there, when it comes to hit rate. And if you go with the candlesticks, hammer and shooting star, dark cloud cover, piercing pattern, bullish engulfing, they have a hit rate of 60% each. When it comes to the bearish engulfing, this one has a hit rate alone of 80%. So this means if you could put both together, by definition, you have a high hit rate. But, of course, it's not 100%. It will never be. But you have something, and I never measured this because, it's also the matter when you exit your trade.
Absolutely. Absolutely.
So if you don't take a profit, you will have losers by definition someday, right? So it's somewhere, let's say, about 60 to 80%.
Awesome. Fantastic. And can you, I will just start reading a few of the questions because going backwards and read the questions, we will forget. We're not going to understand, obviously, what are they asking about. So, guys, sorry, someone wrote in, it's in French. Sorry, my friend, I cannot read French. A question from Joe's, how do you identify those opportunities, please? How long took you to catch that spot of the market? Okay, swings, highs and low pivot points. Okay, do you use pivot points on your charts? Or what? Let's make it more generic. What sort of indicators, except the Bollinger Bands, of course?
That's it. Sometimes I like to take a closer look at the slow stochastic, but it's just for, having some kind of more confirmation, or maybe sometimes a filter, but it's more, it's more a side one. Basically, I'm just looking at the Bollinger Bands and the candlesticks.
Okay. So you will be looking, let's say, the stochastic as a momentum indicator just to see if there is exhaustion or something.
Yeah, I just want to see, when I'm maybe, when I have a situation where I'm not so sure about what does this mean to me, or how to feel about this. I take a closer look at the slow stochastic and to see, I want to have it oversold or overbought in that area, and then crossing each other. So that's a basic one. And also quite interesting if you have some kind of divergences as well. So this is also pretty cool to see. But in general, it's more the Bollinger Band for me and the candlestick.
Cool. Let's read a little bit more. So that's an interesting question, I can say, come from Carlos. After trading successfully in a small scale, how can I increase position size? Or when it comes the point that, okay, I will start risking a little bit more, and just to be covered with that and be crystal clear, we're not going to give any personal or trading advice or any business recommendation here.
Exactly.
Purely from Wieland's perspective, how would he increase the trading size?
Right. I mean, in general, if you just put out the math, let's say you start with, let's make it easy. So just for calculation, you can add zeros, or you can put some away. Like, let's say you have a $10,000 account or euro, doesn't matter. And you trade for 1 year and you make like 20% profit. You end up with 12,000, right? Before tax. So not talking tax here. So what you can do now is you have 1%. So first you had $100 or euro as a risk you can take over. And then with 1%, you have $120 euro as a risk to take over. So there's a growth in it. Unfortunately, I know it's a very slow growth. So that's a challenge we have. If we don't have that big account, what can we do? Of course, you can raise your risk a bit, but then you have to look at your numbers. And the numbers are, okay, how is my hit rate? If you have a hit rate which is higher than 50%, you can talk about raising your risk a bit, let's say from 1 to 1.5. If you have a 50% hit rate and let's say a risk-reward ratio from all of your results on average of, let's say, 1.5, you can play around with that as well. And then by definition, you get higher results, right? So I made a calculation in my presentations about risk management and also in the book, I always show this and I talk about this. So as an idea, if let's say you go with a money management matrix, you have 1% risk, you have 100 trades, you have a hit rate of 50%, and you have a risk reward ratio of 1.5. Your profit will be 25%, right? You can do the math, but you can do this calculation, but just think about this. So, and now the question is, what can we change? So let's say you have a higher, maybe you have the same account size, but you're very comfortable now in trading and everything works well for you. So what you can do is you double your risk from 1 to 2% without changing any of the other things, And what happens is that you double your profit, your performance with that. You come from 25 to 50%. And the same goes if you go from your risk reward ratio 1.5 as a target on average to a risk reward ratio of 2.0. But just by doing this, or if you have a higher hit rate, not 50% anymore, but 60%, with all these three things, you can double your profit. But of course, you need to be very disciplined to do so. And of course, market has to provide these situations. That's the most challenging part, by the way, right? That's why I don't want to talk about the idea, okay, you can double your trades. So, but, if there are no trades, you cannot double them. So what can you say? So market has to offer it. And of course, this is the most difficult one.
Yeah, absolutely. But it's also essential when you said there are 4 different aspects
Right.
take in consideration, and you don't just say, okay, I'm going to increase. You're going to increase the size, trading size based on which element, right?
Yeah. Yeah.
And
under no circumstances, I would suggest to go higher on the risk to 2%. Because if you're on the wrong side of the trade, this goes like very fast.
Yeah.
You're done.
Yeah. The idea of using stop losses, is it something you highly recommend and encourage traders to do that?
For sure. I mean, this is never-ending discussions amongst traders, and I really enjoy this one because both sides are right. The question always is, in what kind of environment are you and what are you trading? For us, as we are trading with the lever, if you don't have a stop loss, you're screwed, period.
Yep.
If you're an investor and you go for, I want to follow Warren Buffett's footsteps, you will never think about a stop loss because you're investing and you want to see lower prices to invest even more. It's a different story.
Yep.
And also, in my podcast, I had a very, very interesting interview with Dr. Tom Starke from Australia. He's actually German, but he's living in Australia. He's a hedge fund manager. And we were discussing when I was back in, when I was in Sydney, we're sitting in his house and we had this discussion, and it was so funny because he said, I never use a stop loss. And then I asked him, also in the interview, I asked him, okay, how is this possible? And then I understood what he was doing because he was in a constant position, just adding and lowering, but still a constant position. So, of course, he doesn't have a stop loss, but don't expect him to go down the drain with the money as a hedge fund manager. He just lowers the position or raises the position. That's it.
Exactly.
Right? But as retail traders, we go in a trade, we get out of a trade. That's it, period. Therefore, no stop loss, no account.
Exactly.
Yeah.
And it's a different mindset traders need to acquire.
Right.
To trade the financial markets or the equities and any leverage product. Let's put it more generic, rather than when we do investing. Because, as you said, you invest, let's say, the Bitcoin is on 30,000. When it goes to 16,000 or to 10, you want to add more and more. So you kind of averaging the positions. But in trading, yes, it's we go in, we go out.
Right.
Approaching towards the end of our amazing discussion, I say, do you recall any challenging moments in your trading career, something that maybe you had that day where you made a lot of money in your perspective, or you lost what you thought it will be a good, and you went through an emotional cycle? Can you recall something that you can share with us?
Sure, I'm happy to do so. So all the experiences I made, I write articles, I have speeches and talks, I write books. There's a reason for it. Because I experienced so many things where I felt like, oh man, I have to think about this. Right? Yeah. So especially risk management, risk and money management is so essential. And I thought a lot about this, and I developed some talk about this, and then I wrote a book about it because it's so essential. I thought so hard about how to solve it. The same is true for all the trading psychology. It's not just by reading a book. It's by experiencing and feeling like, oh man, something is so wrong here with me. But I want to be a trader, and I want to be a successful trader because that's what I want to be and what I want to do. So I have to find a solution here. So of course, there are a lot of situations I have been in which were really, let's say, uncomfortable. And I remember one which was really, really, really interesting. I learned a lot of it, but it was quite costly. So there was a situation, it's years ago, like 10 years or so. So there was a situation where I was like, I don't know, I didn't have that hand for the trades, and I almost lost 50% of my account in a very fast time, even more, I guess. And then it was just like that moment where something switched and I went over more to price action. I was in the zone. This was really the zone. So I doubled this account and I doubled it again. And then there was that trade. That one.
Okay.
Where I was on the wrong side. And then I was like, everything went so smooth. So it's not acceptable to have this loser here. So everybody knows right now what's coming. So it's not acceptable to have this one to be a loser. So I just sit a bit in it and I just go on the reversals and, this will come back. And I entered even more of the position. So I did every mistake. So I did the martingale, I doubled the position, then I doubled it again, and I doubled it again. And I went so deep that I literally got a margin call. So it was a buying position, and it was really like dropping, and it was dropping we're talking about minutes here, right? So, not weeks,
yeah.
It was like minutes or days anyway.
Yeah.
So the market was completely dropping, and I got a margin call, I got liquidated. The account was literally broke and gone. And this was a moment, guess what? Where the market reversed for the next rally. Right? So that was the situation, and it had it all, right? It had it all. It had, first of all, bad trading, but not that bad. And it has the whole way back and the whole experience of, I'm the biggest one, finally I got it. And then there was this one situation. That was my ego. It was martingale. It was all the mistakes you can have in one situation. So if you want to go with a movie, that one would be the perfect one as a trader. So I learned a lot of it. And also, this is the experience where you never have to put all the money you have into your trading account, right? So just use that money you can afford to lose. Because if you get in a situation like that, you will not like to have the experience that you lose all of your life savings in one bad trade, right? So that also was for me the case, that I just had the money I can afford. Everything was okay. I had a good job back then. So not a problem at all, but I learned so much about trading. I learned even more about myself.
I think the last what you just said, you learn even more about yourself. It's the key point here.
Yeah.
That's awesome. We have few minutes left, and I will go, guys. There are lots and lots of questions, but I will just pick up a few of them. And again, apologies in advance if I don't read aloud your question. What is the best market for beginners? That's a good question, actually.
It is. I definitely would not recommend the NASDAQ 100 because this one can be a beast. And if you're not familiar and comfortable with volatility and also getting stopped out, because this happens, of course, then I would rather go to something going more smooth, like let's say Dow Jones, maybe the DAX. But the DAX is not that easy either. Maybe you want to go for the euro US dollar, which is very good if you want to go with the trend and go with pullbacks, reversals at resistance and support zones. This is quite nice to handle. And as a beginner, I definitely would not recommend to go into a 5 minutes chart. You want to go daily. You want to learn first of all about technical analysis. You want to learn about how everything works. You want to make your experience there in given time. And then you can go, let's say, 1 hour chart, and then you can go lower in your time frames. But don't try to be a trader on a 5 minutes chart in the first week. This will not be successful.
Thank you so much for sharing that. And unfortunately, most of us, we learn it the hard way.
That's true.
And we try to, let's say, put a level of protection to the traders. They come to us and we encourage them to learn from our experience.
Yeah.
And I think that's the most challenging for a human, to learn from somebody else's experience. It's pretty interesting. Another question, Wieland, any hours? Do you have any hours, not time frame, hours you prefer to monitor when trading Nasdaq? I think you already
around the open.
Yep.
Yeah.
AM or PM? No, AM or European Open. We're talking about European Open.
Yeah, European Open. So both sides of the both sides of the markets are good for the Open, because everybody's going into this. So all the trades are being done. Then after the Open, after the morning comes lunchtime, so everybody's lunch, and then trading gets slower. And actually, as I'm a traveler, so I'm traveling the world. I don't want to be in front of my screens the whole day. I want to experience the world, the cities, the people. I want to experience everything. I just need some money for it.
Yeah. Awesome. Slowly we came to the end. I don't believe how this 1 hour went so fast. Honestly, it's been 1 hour. Before we wrap up, I would like to let the people know how to contact you, right? So just allow me to share the screen here and just go through your, that's your podcast, right? Where people, they can listen to all your podcasts here.
Mm-hmm.
So I'll share this with the audience. Then Torero Traders School.com.
Mm-hmm.
Yep.
That's me.
That's you. Yeah. In which side of the world?
Oh, that's Hamburg. Well, and as I'm a nomad, of course, I know a lot of nomads too. And that one happens to be, a videographer. And I met him in Hamburg, in Bangkok, and another place in Germany. So by accident.
Awesome. And here people can find your trading strategy, and they can contact you if they want to. And also, I will encourage everyone to follow you on Instagram, because you put very valuable content here, and it will be good for traders, either new, beginner, advanced traders, doesn't matter.
Exactly.
So at this stage, I would like to thank you very much for participating in the Market Talk series here we host at Admirals. And thanks for sharing with us so valuable information and insights about your trading. And I wish you the best luck. And hopefully we're going to talk in another webinar or something
soon.
Sure.
Theo, thank you so much. Thanks for having me. Thanks for the great audience and the great questions. Also, I just read right now all the greetings. So I'm very, I'm very touched by this. So thanks for having me, and I hope we continue. And also looking forward our next interview for the podcast. So let's see how it works.
Absolutely. We will be in touch. Thank you so much.
That's already it. And I really hope that you enjoyed this episode and you took away some learnings for your personal trading. If you want to learn more about me, about my interview partners, if you want to have a one-on-one coaching or even get into a training course with me or my interview partners, just get into the show notes and follow one of all these links you find there. And then I will be happy to hear and see you again. Your Wieland Arlt.